Hey everyone, welcome back to the channel. Today we're going to take a look at Dropbox. So this is an interesting one. As a consumer, I love this product. I have the free version, right? So I just don't pay them anything and I get 5 GB of really efficient kind of cloud storage that I can access from my laptop, my phone, or browser. I really enjoy it and I actually, as a consumer, I love it. I would sign up for more, but I feel like it's a little expensive for like their first entry tier plan. Um, Let me see if I can find it here just to show you guys. If you're not familiar, I mean, it's really cool. It's basically just installs on your computer like a folder, and then in that folder you can save things and you can create subfolders, and then any device that's signed into this Dropbox account can access that folder just from the file directory on the computer. Really convenient, really nice. Very similar if you work in like a corporate setting. Um, but for individuals, here's kind of the problem I have is like I think they have like a few different tiers, but it's like 20 bucks a month. I think there's one that's a little bit cheaper, but it's still, yeah, 15 bucks a month is the standard, right? Like I don't need 5 TB of storage space. Like I wish they had an option that was like 100 GB for like $3 a month or something. Like iCloud has that. They have like a option. It's like 100 GB for $1 a month. If they had something like that, I would sign up for sure. But a little pricey. I don't know if there's a way to see all the different plans. Yeah, here we go. Personal. Right, yeah, so 2 TB is the lowest. Um, does it have the pricing down here? Yeah, 10 bucks a month. Like I like your service, but not that much. Give me an option with 100 GB for 2 bucks a month and I'd sign up tomorrow. Anyways, long way of saying, if you're not familiar with Dropbox, it's a pretty cool service. I'd recommend checking out the free version at least. It's really convenient, especially as a student it was, for being able to access files and print them and all of that. But currently the stock, right, 27.23. This is a 4-1 after hours market cap, 11.3 billion. It's a pretty small company, all things considered. But yeah, I threw together this DCF. Financials, they don't really break out the revenue very much, which was kind of a bummer, but is what it is, I guess. But what we really need to do here, they gave us paying users. So it's grown from 8.8 million to 15.5 million. They give us the average revenue per paying user. So $110 per user. So if we calculate this, right, this is going to give us 973. So in ARPU, or however the heck you say this acronym, there's like seasonality in it. So the numbers they provide are probably as of a certain date, but as the year kind of goes on, right, they're either increasing the average revenue, things fluctuate. So the full year they don't get that. So if we look, right, this is as a percentage of their actual revenue. So we'll actually calculate this here. So we'll do like calculated revenue, which is just going to equal our paid users times our average revenue per user, right? And we'll do this for all the years. And we'll do actual revenue, which is just going to link back up here. And we can see actual revenue is always a little bit lower. I think that makes sense. It could be, mid-year, you're always increasing your average revenue per user. So every report is probably the highest number for the year, but it wasn't that high for the full year. And then if we do just like actual divided by calculated, this will give us a percentage, right, that we can discount down when we make our calculations here. So, but yeah, no, I mean, it is growing, so that's awesome to see. And then if we come here, annual recurring revenue, this is something they just started to release in their 2020 filing, I think was the first time. And this is like, as of that snapshot in time, how much of their revenue would be reoccurring and what do they calculate it at. So obviously it's gonna be a little bit less as well, but it's basically all their revenue, more or less. So is what it is. But what we're gonna do is we're gonna actually go ahead and calculate out through 2030, so we can link this back up onto the DCF and see what we can kind of get here. So the interesting thing about Dropbox is I think it's a small business solution, I would argue. Right, like they have this advanced business, as much space as you need, but like a Fortune 500 is usually like internal servers and stuff. They have, their own internal IT department that runs all this in-house with file servers and all of that. I think this is much more for like the startup, right? Like 3+ users, 5 TB of data, and it's, $12 a month, $17 a month. So I think that this is, I don't think their customer base is the Fortune 500s. I think it's consumers and then people with small businesses. Um, and I think that's probably a pretty sticky customer base, to be honest. I think once you make the decision to come sign up for this, and you have it integrated and everything saved on here, the hassle of moving everything off Dropbox to another service. So I think it's a pretty sticky service, to be honest. And I mean, I think I started using this service and it was probably 2010, I think I learned about it, 2009. Um, I was an undergrad, and I think my physics professor in lab was like, if you haven't had Dropbox, like it's this new service, it's awesome. And um, let me see, when were they founded? 2007. So yeah, 2000, it was probably 2009, 2010, and I've used it religiously since. Never upgraded, but I use it. Um, anyways, let's look at the um, paying users, right? We'll do a quick calculation, right? And we'll just see how many they're gaining every year here. Um, and it looks like it's slowing. So I don't know if that's a good thing or a bad thing, right? But it's something. So maybe we have them drop down to 1. I know that's probably, oops, that's not what I meant to do. There we go. I mean, that's averaging 1.67. I mean, that was a small drop. That was a big drop, small drop, big drop. I don't know. Hard to say. Maybe I'll do like 1.25. I feel like that's kind of not huge, but should be a good first pass here. In the blue cells, if you haven't watched my videos before, these are the things we're inputting manually that if you download this, I put the link below in every video. Download the model. These are the cells you'll want to change to update the model live when you're working on it. So from here right now, we can just link this up, calculate how many paid users they have. And, we can kind of look, 30 million users. Yeah, that's probably reasonable. I'm guessing they're operating globally, not just in the US, right? So I mean, between just Europe and US, you have what, 1 billion people probably. So 30 million, that's not that crazy. Small business user, yeah, I think that's reasonable. Average revenue, this is interesting. Are they going to be able to continue increasing price? And that's the thing, like once you're on their service, especially if you're 5 TB of data, that's a hard thing to migrate if you're a small business. Like you don't have the time or the expertise really. It looks like they've been increasing, what, $2 here. Maybe here we'll just do annual ARPU increase. And you could set these as percentages as well. For some reason, I just thought it might be nice to do it in dollar terms, but yeah, I mean, it looks like they've been averaging $5 the last few years. So maybe we'll do this minus 25 cents over time, right? You can't just price gouge forever. Your prices will get insane. But as they kind of get people into other services, things like that, more expensive tiers, more enterprise clients, things like that, it could actually become better. And I mean, just to make sure this is kind of rational, right? Let's go back to their thing right here. If you pay yearly, $10 a month, that's $120 a year if you're just on the basic service, right? Like, so they're a little bit over that in these years, right? So $17 a month, 20, so 20, and that's for like enterprise, and this is 17 a month. So let's just sanity check here. What's plus 17 times 12? 204. So this is getting most of your people just onto your higher end product with more data. But also, if that's your only assumption, then right, you're not assuming anyone upgrade. So I think this is reasonable. ARR, for now, we're just going to ignore this. It's kind of just a repetitive statistic, I think, to the ARPU and the calculated revenue that we're doing here. So let's just calculate this over. There we go. And I mean, this has actually been increasing, but you know, we'll just leave it at the 96%. From there, we can now calculate our revenue. So there we go. Guess this is an assumption, so we'll make that blue. And then this is really what we're interested in. I guess it's not actual revenue. This should be called forecasted revenue. The actuals are here, but we'll call it actual / forecasted. So there we go. We have that all set up. Now we'll go ahead and link it up to our DCF. So here, let's actually link that up. There we go. Let's come down here. We'll calculate this now and see, did we make any crazy assumptions? So we're actually assuming right revenue decreases. That's probably fair. So we can leave that like that. COGS, right? Left that at just kind of the historical COGS. R&D. So that is something to note of this company. They spend a lot on R&D. If you cut their R&D like immediately, this company would be cash flow positive and would probably be a pretty good play. So I do have their R&D decreasing as a percent of sales. We'll tweak this. Maybe we'll make it decrease quicker, faster, slower, something like that. I think sales and marketing, actually, this might be something where they're going to need to spend more money on, the more I think about it, just to kind of keep growth and actually get clients on here. I think that is going to be a piece that grows. SG&A, 12%, that's fine. Tax rate, 21%, that's fine. CapEx, we can adjust this. We'll do 4% for now, historical CapEx. Depreciation 80%. I always leave. So the reason it's so high right here, they wrote off a couple of assets. They had some data centers that they got rid of. So and they had to accelerate depreciation on them. So you see some really funky where the depreciation is much higher than the CapEx. But we'll just kind of normalize that out. And then down here, working capital assumptions, just kind of took the averages. And so, kind of this first pass, what we get here is $6.2 billion enterprise value. And actually, let me double check that. I don't know if the net debt is set correct. E4, E5, E4, E5. They have no debt. They have no debt. So yeah, it's set up. So 6.3 billion. They're at 12 billion or 11.3 billion. So, there's definitely a big difference here. And, you might even want to put like probably a 12% whack on this, to be honest. It's a pretty risky company. It's a small company. I think anytime you're dealing with a small company, there's a lot of inherent risk. So definitely some risk there. We can go back and we can touch on our sales assumptions again, see if we can't figure out how we kind of get to something similar to what's being projected there, and we'll kind of go from there. So maybe if we, maybe instead of having it decrease as heavily, let's have it decrease 5 cents a year. So let's see, just doing that, still pretty far off. Next thing, new users, right? Like instead of saying they're dying, are we going to say they're going to just turn over a new leaf and just see supercharged growth or return back to outside of 2020, right? So 1.84. And I'm just playing with the numbers here to try to see how can we get something similar. You see, this isn't really moving the needle much. So my guess is you probably really, right, if you throw this down to an 8%, you're there. So the question is like, would you be comfortable assuming continued annual revenue um, growth at kind of current rates, we're going to say 2020 was a blip for new users and they're going to go back to the average pre-2020. If that's the case and you're feeling pretty comfortable with it and you don't think that that is actually that risky, yeah, they're probably fairly valued. Right, so if we put 8%, oops, 8% here, put 9 here, 7 here, right, you get a 9 to 15 billion. Really just kind of depends how you feel about the risk of the business. I think this is mostly consumer-based business. I think this is just me speaking from what I wish they offered was if they had a plan that was $5 a month and gave me access to 500 gigabytes to store stuff, I'd sign up. $10 a month for something where I've historically had less than 5 gigabytes. I think I've just recently kind of run into the limit and I had to go through and clean out my folder for the free version. I think if they had a cheap version for like the college kid that, wants to store 10 gigabytes, 20 gigabytes worth of stuff in here for $1, similar to like Apple iCloud pricing. Let's see. iCloud storage plans. Where's the USD? Yeah, right. Like I get 50 gigabytes for $1. I have this on my iPhone just so I can like have the backup and not have to worry about all of that and back up my photos, right, for $1. And then 200 gigabytes for $3. Like I think if they offered plans like this, a lot of their free consumers might actually migrate to one of those plans. And, while it's only an extra $3, if you can gain a million additional users, you know what I mean, a couple million extra users, because I'm going to guess their paying users is probably a small portion of their total user base, right? I'm going to guess for every paying customer, there's like 3 or 4 non-paying at least. So if you could convert, you know what I mean? If you added another, let's just say you added another 15 million users, we can do this real quick. We'll build it out as if they, introduced a new product line, right? And we'll just call this like consumer entry level, and then price per user. And let's take Apple's pricing, $2.99 and 99 cents. So let's just blend that. We'll say $2. We're gonna say you're gonna get $2 per user here. Maybe these numbers just aren't material and that's why they're not focusing on it. Which is what I'm kind of starting to think here, but this could be like additional revenue, right? And when you have 2 billion in revenue, is it really worth your time to introduce this for an extra 30 million? I don't know. Say we call it 5. I'm not entirely sure, would this be worth their time, energy, or effort to do? Maybe this is why they haven't, but kind of a fun little analysis to do here on the fly. And then, we're going to say they're actually going to add at least 2 million a year because that's what we have the assumption for their paid, right? So, over time, right? Yeah, it's not huge, but it's something. Then we're going to say this is actually going to increase, 5 cents a year, something like that, right? Because I don't know, you're going to migrate some portion over to a higher paid plan or something. Extra 180 million. So then if you had like some, let's call this adjusted revenue. What kind of numbers do we get here? And then if we link this up on the DCF instead, oops, well, that didn't work out because it locked the cells. There we go. I don't think it made a huge difference. And, you could try to make the argument that, and I guess we would need we would need to know how many unpaying users they have, right? If they have 100 million users on their platform, and maybe we can see this real quick. I don't know if they've, so that's the paying. Um, I don't know if they report the, and I guess I don't know like paid versus unpaid ratio. I'm sure you could go look at some other companies that have paid and free services and get an idea of the ratio. But maybe if this starts at 30 million, right? All of a sudden it's a $250 million business. Um, that looks a lot more attractive, right? You could probably throw a 10% discount on here. So I don't know. I think it's interesting. I think they have a lot of space to play in. I think they're definitely priced for growth, would be my say. Um, but definitely a fun little analysis. Let me know your thoughts or comments. If you have any questions, leave them below and I'll try to answer them as quick as I can. Thanks for tuning in.